Hi everyone, JD here. I thought it would make sense to publish a video series to help you better understand the many articles, charts, and research that I provide for you over the years. The purpose is not only to give you a historical perspective and the fundamental underpinnings of the research, but to give you some actual technical signals that have helped value and momentum breakouts call every major downturn in the market and produce returns that are significantly beating the S&P 500 for the past 7 years. What I thought I would do is start with an overview of the new Momentum Gauge website and show you how that connects to the methodology, and we'll get into more detail there. First, on the main dashboard, you'll see the market gauges in the upper left, showing that we're trending in a positive condition with breakouts in June. On the right-hand side, it's an overview of the S&P 500 gauges with the chart going up this way. And in the middle, it gives you the 11 different sectors, and it shows you with arrows how they're trending. Currently, they're all positive from the strongest breakout in June that we've seen since January. But you can see that 6 are trending higher and 5 are trending lower. And so as you make your assessment on what stocks you want to get into, it's good to look at how the overall market is doing and how each individual sector is doing. And those things will all play an important role in making the best decisions for breakouts. As we scroll down, you have the market momentum gauges listed here, and that's an overview of 7,500 stocks on the momentum gauges. And it tells you we have 84 positive in segment 6 and 16 negative in segment 2. And I'll explain that language a little bit in more detail. It says here segment 6 and segment 2, that's negative acceleration and that's positive acceleration. And that's part of the methodology. And I'll show you that here. When we get a negative signal, I also call them topping signals, it tells us that the market is going to be heading downward, that a majority of stocks are tipping over and moving in a negative direction. We want to avoid market conditions when things are negative. And conversely, when it moves into segment 6, we're getting a majority of stocks in very positive acceleration. That's usually here near the bottom, and it's a good time to get in. So we have these positive and negative signals can be used at the macro level, as I'm showing here on the S&P 500, and we can avoid major downturns. And it can also be used on an individual stock basis, a sector basis, and for ETF trading. And I'll go into that in a little bit more detail. What I want to highlight is in this momentum cycle analysis that I developed, I categorized it into 7 segments. And the 2 segments that matter most to us are the high negative acceleration and the high positive acceleration. And this is when stocks are moving into really strong breakout conditions and really negative conditions. We don't want to be holding stocks when the market's moving into negative conditions. And we do want to buy stocks that are in this positive condition. Now, I won't get into all the details of the variables that come into these selections, but I will give you an overview of how I go about using some of the proxy indicators for these stocks. So let me just highlight with this presentation here how, as an example, I pulled out 5 proxy variables, and by no means do these represent all the variables that are in the MDA analysis, but these are 5 that give us a good approximation that we can do on a live trading basis. And so looking at this company, Axel RX Pharmaceuticals, you could see that these signals were turning negative in the March timeframe. And you could see the price started to move downwards. When these signals all started to turn positive, we got a strong breakout. Subsequently, they moved into an overbought level here, and then they sold off. And you can see how they were coming down, but not all the signals were negative. And you can see it moved into a consolidation level. The next strong signal that this gives us is a breakout signal with all the indicators moving positive again. And you can see how these 5 proxy variables that are part of the MDA analysis in different forms will give us a good indicator of when to buy a stock and when to sell a stock at the most extreme levels of the cycle. Here's another example from Zoma. Again, that was a positive signal here to start, and then it stayed positive through here, turned negative. And the more signals that confirm a change in direction, the stronger the price movement is likely to be. And also the steepness of these curves matters as well. So then there was a buy indicator. You'll notice that it didn't correspond all at the same time, but all the indicators were positive by the time it finally broke out. And these are things to consider. Here's the last one I'll show you. Indicators were breaking down into negative conditions, turning positive after this negative channel came to an end. You can see large high inflows, very steep change in direction, and then it moved into a positive channel. And then later on, a few months later, we got very strong positive again, and it turned into a very large breakout. So there's more examples in the presentations and the resources that I provide you, but those are just a couple things that I wanted to highlight. The next thing I want to show you is on the Momentum Gauge website. You can see it's broken down into these categories. Market, which looks at 7,500 stocks in the 3 major U.S. exchanges. Then the S&P 500 momentum gauges. And then it goes into the sector gauges for all the 11 sectors. Related to each one are breakout picks for the market, for the S&P 500, and then a pick for each of the different sectors. And then in another column over here, these are the breakdown stocks. These are stocks that you can short and give you some other options in your trading. Okay, what we'll do first is we'll look at some of these stocks here. Let's say CLS and technology. We know technology is going strong. We want to see this stock as a breakout. So we go to CLS and we can see, oh yeah, it's in a breakout. It's really taken off. And I'll add some lines here to show you. It started, you can see, again, using the proxy indicators and other variables, you can see that it's definitely in breakout since the beginning of June. It's cleared resistance again at 13, and it's still going. And back here, we got a negative signal, and you can see it was in decline, positive. And the more of these signals that are positive, the better. And the more that are negative, the more reliable that signal will be. So this is one way you can trade those. The other thing to look at is if we go over to the negative side, let's look at PENN. And that's one that we've discussed a lot in the chat rooms. The chart on PENN has been it's been oscillating quite a bit. It's a favorite one for people to trade. It's got a lot of volatility, and I'll just add some chart lines to it, and you'll see that it keeps going up and testing this resistance line in the negative channel. And related to that, it's oscillating from oversold levels back into breakout with these positive arrows, takes off. Then it moves into overbought, falls back with a negative signal. Then it moves into oversold, which is a good place to buy if the fundamentals are still strong. And it works its way back up, positive channel, hits resistance again, overbought level, comes back down to oversold. And it's just been repeating the cycle. You can see that traders have gotten into this pattern, and they're just buying and selling along this pattern. And then just this week, it moved back into breakdown conditions. The other thing, and we won't spend a lot of time on this video going into it, but you can see how the volumes are very high at price changes, where the channels change direction. Where when we have a continuous gain, you can see the volumes stay relatively low and investors are not looking to change their position. So that's something to keep in mind. If you see very high volumes, it can lead to either a sell-off or a big buying opportunity. You can see where these peak volumes are kicking in. But that's just one of the many variables that are part of the process of the MDA breakout stocks. So that's looking at the stocks. And these change, they update twice a day for for the market, for the S&P 500, and for the sectors. And then the other thing that's already included is we have ETFs in these charts. So a couple of the ETFs that really stand out are in the sectors for technology. So let's click here and look at the daily chart for technology. And we'll look at the year-to-date chart. And you can see technology has been in a huge breakout for June. And this is highlighted in yellow with the TECL, which is the 3X Technology Fund. And you can see where those arrows, the up arrow is a buy on the MDA breakout or a segment 6 indicator. And the down arrow is a sell or a negative acceleration segment 2 indicator. And you can see where those breakouts were very strong. And in fact, we are in the strongest breakout for technology since January. And you can see how TECL took off. And here it's already had a 56% run from the lows in May. Now, when you look at these ETF signals on the momentum gauges, you can go by the crossover, which is the official signal, when green moves above red, green being the positive momentum, red being negative momentum and declining here. Or you can start to move in a little bit sooner, and you'll notice that when the positive momentum is near max lows, as it was in April, you can see it start to climb higher as an early entry point. Now, that doesn't guarantee that it's going to be a breakout, and you can see for a long time TECL in yellow, we'll highlight it again, it was pretty flat between March and May. But you can see the gauges were moving up sharply, and it was showing that a lot of technology stocks were in breakout conditions and fewer were in negative acceleration, and they were declining. So that was giving us a tipping point of when this was crossing for an entry point for a buy. Now the concern is, has the technology sector moved too far too fast? And a couple ways to look at that is the last time it peaked was back here on February 2nd at 180 positive and 10 negative. So we are still here at 112 positive and 20 negative. And we peaked at about 130. So it could be that we're going to just keep zigzagging higher till we get, like zigzags back here, till we get up to 180 as a peak. But the other factor to watch is the negative side. If the negative side shoots up pretty high to the 30s, that could be an early indicator as well that the technology sector is fading from this big momentum run. So that's going to be an important one to watch. And you can look at the raw data down here and see that it's been in a positive breakout segment 6 for 22 days. Okay, so the next sector we want to look at is the financial sector. And the reason we want to look at that is that this has been an unusual year for the financial industry. We've had the largest bank collapses since 2008, and they occurred right in March. And what we can see from this indicator on the momentum gauge sectors is we got a -2 signal here, a topping signal for the sector back on February 21st. And that was before the financial crisis, if you want to call that, happened. And we had 3 major bank collapses over here in March. And that signal went off on a cross, and it stayed negative all the way until May. And now we're in the strongest positive signal in June that we've seen going back to January again. Now the big question is, how long will this run last? And there's a couple considerations to look at. One is, can the negative values go any lower, and how long can they stay this low? And you can see they were very low back here in January. That's the red line. Looking at the green line, it peaked over here last week at 104, and over here back in January it peaked at 81. So we're pretty elevated on the positive side, but at the same time, the FAS ETF is still relatively low. It hasn't really broken out to the highs. It still has a long ways to go to get back to where it was in February. So that's something to keep an eye on. It's quite possible that the banks could get back into more breakout and we get a much higher signal. The other thing you can do is you can scale this to look back on historical breakouts. And now I'm going back to a lot of data to see how high does the positive usually get. And there's not a very we're based on historical data going back to about 3 years on the sector data. The green is pretty high relative to all the prior times. So what that means is that banks don't typically get into very high positive acceleration, and when they do, it's usually maxing out around 100. Here it's 104. So we could stay positive for a while, but it doesn't mean we're going to get large positive numbers, and we got to keep our eye on how long this negative value stays low. We want to watch for any warning signals like this takeoff here. Okay, so that highlights a couple stocks and a couple ETFs, and I think that gives you a good initial idea of how the momentum gauges work. I'll have a lot more data in future videos, but this is just a start to give you a little bit more background. Good luck in all your trading.